Good evening, pirates. We are going to start our session in next 4 minutes. Am I audible?
Yes, sir.
Thank you. Okay, so before starting our session, uh, can you introduce yourself just in chat box? How far you are in market and what is your current what is the current instrument you are trading, or are you trading or are you investing, and what is your current age, so that I should know to whom I am speaking with. Just give me a short introduction. It should be like 38. Bank Nifty options. Okay, good. What about others? Just share the basic information so that I can know to whom I am speaking with. Are these all experienced participants or freshers? So that then I can change the tone of this session. If we all are experienced, then we can really start with the without even referring to basics. 3 years. Okay. 3 years again. Raguraj is 1 plus year. Good. Ashwini is 1 year. Okay, no problem. Hemraj 39 years. Bank Nifty and Nifty from last 1 year. Okay, so we all have some experience in the market. And so what are we? Okay, Robin is there for 5 years in market, but 2 years started being profitable, being option selling or hedging, mainly non-directional index. Age is 34. No problem. So basically, why I'm conducting this session, I'm going to share my perspective, why I'm conducting such sessions, and to whom it should be beneficial, and in what way it should be beneficial. It is nothing but a 5 days revolutionary shadow trading workshop. I named it as an shadow trading workshop. What is workshop? It is not a 1 day session, it is not the webinar. I'm going to share my observations which I have collected since last 5 years, where I have spent my good amount of time in with single chart, that is Bank Nifty. So I have traded Bank Nifty for Bank Nifty single lot in year 2017. So for 1 year and 8 months continuously, I have traded with single lot every day, and whatever observations I got from the market, I have noted down all the observations. I have filtered those observations, and accidentally I have come across one of the theorem which we call it as an uh, patient zone theory. It was theorem that time because I need to prove some points, and what all the observations which I have collected for this patient zone theorem, I'm going to share everything, or we are going to exchange this information. As you are also experienced, I have some experience in market. We are going to exchange this experience, and my role is, if I'm sharing this with you, uh, it is my commitment that whatever observations I have collected, it will not be shared partially. All the observations will be shared with you, and it is definitely going to change your perspective. From today onwards, you will have a completely different perspective towards stock market, and I can guarantee from my side that although you are suppose 1 year, 2 year, 3 year, 5 years of experience in the market, you will feel like you will have around 15 to 20 years of experience by knowing this theorem. Okay, so this 5 days revolutionary workshop is divided into 5 different topics or 5 different days. Day one is basically where we are going to understand different aspects of psychology. So I call it as an two major roles. One is sentiments and another is psychology. What is sentiments? Whenever we are talking about sentiments, we are talking about market. Whenever we are talking about psychology, we are talking about ourselves. On day two, we are going to understand the single page rules, or a method using which we can invest in any stock without any fear. Any stock at any price with same risk and without any fear. It is like, if you get this concept thoroughly, there will be one fine day where you will have no fear in keeping all your money from your bank account to trading account for that single day, and you can also have peaceful sleep on that night. That's my guarantee from my side. Day 3, we are going to understand the most important part of this session, that is the patient zone. Everything is derived from patient zone, and this is the thing which I say, for understanding stock market, we don't need any technicals or fundamentals. We only need to know two control lines and who are responsible for these two control lines, and along with these two control lines, simple mathematics is okay. And I'm going to prove that on day 3. So all the 5 days we are going to understand what is the role of two lines in the stock market, why we are only discussing about two lines, and why we are not discussing about any of the indicators or chart patterns or candlestick patterns or any of advanced data tools which are present, like open interest, OI data, or it is like FIIs or DIS data, how we are not going to refer to anything, and by using plain chart, what we are going to achieve, what level of confidence we are going to get by only looking into plain chart. Day 4, we are going to put more time into stocks, and we are going to understand how an scalper, intraday trader, a positional investor, weekly investor, monthly investor, or long-term investor can implement this opportunity window on stock. So all the applications. So here we are going to understand more about theory. Here we are going to understand more about theory, which is responsible for index manipulation. Here we are going to understand about stock, how to handle stock using this theory, how to handle index using this theory. On day 4, what we are going to understand is how to apply these skills on real stocks or real time stocks, and on day 5 we are going to understand is how to apply all these skills on index. So this is very important session, and just make a note of this. Day 5, you're not going to get the recordings for day 5. Rest of the all the 4 days you are going to get the recording. Okay. And this workshop is I can guarantee that you have never seen such content on any of any of the YouTube channel or any of the books. So what we are going to do is, for next 5 days we are not going to refer whatever skill you currently have. We are not going to refer that skill. We will keep aside that skill for some time, like for 5 days. And after 5 days, if you find this two lines theory is way more powerful than any of the thing which is currently present in the stock market universe, then if you make that decision, then you can take forward this theory along with two lines club. Otherwise you can switch back to your old existing or current techniques. Okay. So let's start with today's session. Day 1. So why we are doing this, and just one moment, maybe some of the participants are still not able to connect. Okay. So whatever we are doing or whatever we are understanding using this session, we are going to build something. It is not about betting. The session is about building, and the amount of time I have spent to analyze this theory is too big, and it is challenge to me to cover all that topic in these 5 days. So if you have any queries, please try to align those queries towards the end of the session. Let me complete the topic first, and then we can visit the queries. Definitely there will be thousands of queries during the session. Just keep noting all this, either put it in chat box, or keep this noting into some notepad, and then towards the end of the session you can refer to the queries. Okay. Language for the session will be in, so I can speak Marathi, Hindi and English, but the language can be English. So sometimes we can switch to Hindi, and sometimes majorly we will be speaking in English. Moment. Okay. So I need commitment, 5 days commitment from all of you. Just forget what we did in past. There is difference between interest and commitment. So I am only interested in committed participant. Okay. Here, if you are interested in something, you do it only when it is convenient. It is like if you are looking for anything which is like an information or new strategy. So don't go ahead with this session. I'm going to share one of the powerful method to analyze the data, and it is uh, this method. A human brain can understand this method in such a way that you don't need any computer. Using plain maths and two horizontal lines, it is processed. So I need committed participants, those who are going to put some time on this, and without any excuse, we are only focusing on the results. Stock market is not different than any other game. So definitely, like any other game, it has participants. Participants are divided into majorly two categories: winners and losers. And there are set of rules. So some of the participants, they know how to follow the rules, and they using these rules, or by knowing these rules, they have some high they have some uh, they get some skills, or they can develop some skills by using these skills. Either they can get some rewards, or if we are not following the rules, we are getting some penalties. There are some winning methods, thousands of winning methods. And for losing methods, if you talk about, there are like millions of losing methods for any of the game. Some open secrets, some hidden secrets. So like every other game, whenever we are talking about stock market, there are some facts. There should be one winner, there should be many losers. Open secrets are traps. So what are the open secrets of stock market? Any chart pattern, candlestick pattern, if you are aware of this, all these things, which is this skill is generally available in the market. And if anything is generally available, the skill will not have that value, or skill will not have that age where you are, or we are going to use that skill to gain something. It is only to trap. I'm going to prove this point. Okay. There are some hidden secrets, and these are real rewards. If you know about these hidden secrets, then you are going to get the actual treasure from the market. Knowing rule before playing the game is very important. Like every other activity, like if you are suppose studying, if you have some business, if you are in some job, so we should know the rules before participating in the activity. Similarly, for stock market, there are some different rules which are completely different from business or job. And if we are master in our job or business, these skills are not directly applicable to stock market. There can be millions of way to fail the game, there can be hundreds of way to win the game. Not every method suits everyone. So whatever I'm going to share with you, it should not suit you literally by 100%, but some part of it you can definitely use. Not one method suits all. It is not like whatever we are discussing will be suitable for all. So everyone will have a different understanding about same method, and everyone will try to catch some part of the method which is easily executable by his or her mind. One should keep collecting reasons of win. If we are winning this game, like if you are getting good trades, good investment from the market, we should keep collecting the reasons why this investment was good, why this trade was good. Also, one should keep collecting the reasons of loss to improve the game. If you want to improve the other side of it, like why I have made that loss, majorly we forget about noting down why we have made our previous loss, or why we have faced any difficulty in our previous investment. If we start noting down all this, then it is going to change our winning rate as well. One can restart game anytime. It is like if you are trading or investing with some method, you can just jump to another method, you can restart the entire game, and you will have a completely different level of execution. One can relearn the game anytime. It is like if you want to get rid of any old skills or any skills which is not directly useful in the market, you can get rid of it. It is just a psychological updation our mind should go through, and it is not that difficult process. Only thing is, if you want to change any habit, there are an additional efforts our mind needs to do, and if we are doing that additional efforts, then our mind going to change the behavior towards this game. One can create own method. So when I realized, after spending around 7 to 8 years, like from 2009, from 2009 to 2015, I have lost around 22 lakhs. And in that period, I have tried each and every method, but nothing was working for me. So one fine day, when I made a loss of 8 lakhs in one single day, on that day I decided I should look for something. And whether then, like, if everything is not working for me, either stock market is a gambling or there is something else. And for that something else, I started working on my own method, and then I started collecting this observation. One can follow, copy, or partially copy others method. It is like, if I'm sharing this method with you, it is not compulsorily that you should follow each and every aspect of this. Some participants are following the power part of it, some participants are following risk part of it, some participants are using cards out of it, some participants are using 0.33% logic out of this. So you will get to know everything, and you need to decide what you want to make, or what you want to take out from this. One can exit game anytime. One can practice method to win the game again and again. So the major role is of practice, and we should have that practice where we are going to if you would like to win this game again, then we should not stop practicing this. One can expedite the winning process with practice. It is like, if your mind is doing same thing, or if your mind is repeating any activity, it goes into our subconscious mind, and subconscious mind does not need any additional effort. It can do this activity without any without spending any additional energy. It is like cycling, or it is like swimming. You need to learn this one time, and it is installed in your brain, and you can reuse it for multiple times. One can master to a level where no one can beat him or her until next master. So even you can master these skills up to certain level, and until there is no other master, we can use the same method, and this method will be useful for us to recreate these winning scenarios. So these are some facts about the game. And why we are talking about this? Because our day one is to tune the right psychology, and to understand the right psychology, we should know what are the right sentiments, why we are focusing on the sentiments. Okay, give me one moment. So if we are talking about sentiments now, after this part, I need some interaction from all of you, as I'm only speaking since last half an hour, I guess. So uh, if we are talking about stock market, what are the different sentiments which are present, or which are responsible for the movement of any stock in the market? What are the different sentiments you have come across? You can just put it into chat box. Stock price is driven by, it can be driven by some news, right? It can be driven by some demand or supply. Yes, some candlestick belongs to technical, so stock can also go up or down based on some technical parameters. It also has some fundamental parameters. It can also get affected by some situations like global cues, or there are some things happening, or any climate issue, or it can be any uh, unexpected, unprecedented event. It can be affected by government policy, or there are some technological changes, natural disasters. If Reliance, suppose there is an Reliance stock and they have changed their corporate policy, or they have some issue with their business, and that business is misunderstood or understood by some of the participants, and the effect of that we can see in this stock. There are some regulation change in the regulations, or it can be change in the some financial parameters, or with respect to organization, there is a change, or there is some legal action is happening on that organization. Everything is going to affect the price of their stock. Okay, as we all are aware of the stock market, stock market is a market for trading stocks. It is like buying and selling of stocks, and the movement of stocks internally, like if we would like to watch what is happening to the entire market, so we have created one index. One index is a integration or combination of multiple sectors. How the different sectors are performing, we can see their performance by using single index. We call it as a Nifty. If we are referring to financial data or some financial institutes and their index, if we are referring to, then we call it as an Bank Nifty. If we are going into individual sectors like energy sector, auto sector is there, multiple sectors are there, pharma sector is there. Every company which belongs to that specific sector is going to define the value of that specific index. So there are different sentiments present in the market, and these sentiments are responsible for the movement of the stocks. So now my question to all of you is, all the sentiments, if all the sentiments are considered for the movement of the stock, what is your opinion about this statement? If stock is moving up, then is that only one sentiment is overpowering all the other sentiments, or this is because of mixture of all the sentiments? What is your opinion? If the stock is moving up, is it because of one single sentiment, or it is because of a mixture of all the sentiments? Mixture of all sentiments, mixture of all sentiments. What about others? Mixture. And so, as per my understanding, suppose if we are considering war situation, so out of 100% participations, how many participant, we are just considering the number, a random number. What is your opinion about how many participants can really consider this factor as a war, and they are going to put their money by considering this fact into the stock? What could be the number of that? What could be the participation percentage out of 100%? Is it 100%, or is it less than 100, or is it less than 50, less than 20? what could be the participation level by only considering war situation? Definitely less than 100, so it can be some number, 10, 20, something. Okay, if at the same time, if war is there, at the same time there is good news about that stock. War is happening globally and there is some good news about one single stock, so this that specific stock will have a mix sentiments, like some positive and mixture of some negative sentiments, and then there will be a different participation based on the different parameter. So why we are discussing this here, I want to tell you, as a retail participant, normally we have around 10,000, 20,000, 50,000, 1 lakh, 2 lakh, approximately 10 lakh in our trading account. And if by considering war, if I am going to put my money into a specific stock, that stock is going to crash by considering this war situation. Is it possible to change the sentiment by using our 2 lakhs or 20, maximum 10 lakhs? How many of you believe that whatever may be the sentiment, there should be some money which should back that sentiment or which should support that sentiment? If you have strong feeling that war is going to change the price of that stock and you are ready with your 10 lakhs, whether is your 10 lakh going to change the sentiment of that stock, or there must be something else who is going to change that sentiment of the stocks or going to change the price of their stock? Definitely we do not have good amount of money, right? So my point is, when I consider this fact, there are multiple factors which is affecting the market, but there is one single entity, that's the assumption I have made, or that's the hypothetical situation I have considered, and I try to find out the answer for this hypothetical situation, where I have considered only one participant or only one set of or one group of participants are driving this market, and the only reason is they have unlimited money, or they have too much money, which if we are collecting all the sentiments and all the money uh, which is been put to to uh, to change the sentiments of the stocks, still there is one set of participants or one group of participants who is having hell lot of money. It is like unlimited money, it is going to overpower every time. Whatever sentiments, whatever thousand different sentiments present in the market, there is one set of participants, they are overpowering this sentiments, and they are changing the direction of the stock or direction of the market. Either they are changing the upside or downside. Why and how they can change the direction upside or downside? The reason is because they have good money to justify their thought process, or to justify what they would like to see in the market. If you would like to see a effect of war, it is like stock is crashing, then you should have that good amount of money, and you should put that money to support your thought. But one moment, your money like we at one certain moment we don't get enough money to support our thought process, and that's the time we uh, like we stop, or that's the point where we cannot take this thought ahead, and the reason what you expected from the market is not going to happen in the market, because of you do not have, or we do not have that much money. And then I concluded that I need to find what these FIs are doing, as if I'm considering any of the analysis, oh, if it is leading for analyzing war situation, what is a war effect on the stock, if it is leading to some natural disaster, if there are some legalities happening, and what is the effect of that. Instead of focusing on all this, if I am looking for something or one single entity which is overpowering everything, will that be beneficial or not? So I got my answer, that could be really beneficial if we are only understanding who are we are only putting our time to understand the winners of the market, or the actual responsible person who is driving this market. And what is your opinion about this? It will it be very beneficial if we are understanding what big players are doing, or do we need to spend some other time to understand the sentiments of all the rest of the participant? What is your opinion? Just put your opinion in chat box. Only big player. Okay, we call it as an smart money. So if we get some hint from the smart money, and a timely hint, if we are getting this hit on a perfect time, then and only then we are going to use this uh, then and only then we are going to get the maximum benefit of this method. Otherwise, only analyzing after market hours, or analyzing once once the things has happened already in the market, it is not going to give us benefit. So what level of understanding we should get is, when the big players are starting their investment, we should get to know about that. When they are coming out of the market, we should get to know about that. And if we are getting these entries and exits made by big players, then it is going to change the entire trading game, and you are going to see exactly the same footprints of these big players by watching plain chart. Okay, and as I mentioned, I have spent good amount of time in bank nifty. I am going to show you everything on bank nifty, and sometimes we will definitely refer nifty. And both the indices have a similar footprints of big players, and no one have yet noticed these footprints, or if anyone has noticed these footprints, they are not ready to share this with retail traders. So my purpose is to share this with retail traders, so that retail traders can at least save his or her hard earned money before investing or before trading into the market. Okay, so these millions of sentiments are not important for you. So only one sentiment is really important, and our theorem is based on this one sentiment. And we call it as a theorem because I am going to prove this again to all the 10 participants which are present in today's session, and hopefully you will also continue until the day 5. And until day 5 we are going to prove this as a theory. So as now we have understood what are the different sentiments present in the chart, but it is not the only part which is going to change our trading style. There is something which is very special to us, that every mind is very special to that person, and we have our individual mind capacity. And because of our past experience, our understanding is completely different. Like my understanding is different than all the 10 participants which are present in today's session. So where exactly this theorem will have a different perception, and we are trying to fix that perception as well. So if we are considering where to analyze these footprints, so we have one common chart which is common. If you are logging in into any of the logging through any of the broker, you are going to get one chart. Suppose it is nifty or bank nifty, and if you are opening this from Chennai, if you are from Delhi, if you are opening this from mobile or laptop or any other tool from any corner of India, you are going to see, you are going to get same chart. But because of our past experience, Some participants will see the market or that stock is going up, and some participant will consider the stock is going to fall. Although the chart is common or chart is same in every machine, but because of our past understanding, we will definitely have a completely different understanding about same chart. Again, there is another confusion because of our psychology about direction. Either market goes up or it goes down, and we are too much confused. Anytime if I'm adding any parameter into my analysis, it is going to dilute the conclusion. Like, if one parameter is saying market is going up, another parameter is saying market is going down, then we will not have a clear direction about the market, and these directions are most important thing if uh, we want to like if you are planning very long journey in the market, to identify the right direction is the only key. And to identify that right direction, what needs to be done, that is not clearly available, or that is not clearly mentioned in any of the book or any of the existing method, and we are going to discuss about this in depth. Why we are going to discuss about in depth? Because there were two important trends or two important directions in the market, upside and downside. It is like uptrend and downtrend. There is one important trend which normally we miss, that is sideways market or sideways trend. And I have spent good amount of time in understanding sideways. It is like I would like to I should give an example here. If any board meeting is happening, okay, that board meeting is going to decide something about, suppose, any organization. It can be uh, adding some new products in our portfolio, or taking some decision which is for the benefit of the organization, or some reducing some manpower. It can be any important decision, and for that every important decision there is a concept of board meeting. This sideways move is nothing but a board meeting which happens frequently on any chart, or in any chart, or majorly we can see these board meetings are happening on index. And these board meetings, if we can by somehow, if you we can understand what is happening in these board meetings, then we are going to get good data which is going to give us good information about what could be the next direction of the market, either it is upside or downside. Then these are the four most important exits. Like, if we are in market since last many years, every day we are toggling between all these four phases. These are four phases, out of which this is uncontrolled loss, this is control loss, this is control profit, and uncontrolled profit. Every time we are opening a trade, we are starting from this point, and then our trade is toggling between all these phases. And if, as I said, if you are part of two lines theory, our first quote or first understanding or first phrase is, your last trade is your experience certificate of your trading journey. If in your last trade, if you have made any uncontrolled loss, and if you say you are there in market since last 10 years, then you are still fresher, because we are not able to handle, or we have not handled our last trade properly. If still we are making any uncontrolled loss, that means we are still fresher in the market. So we should spend good amount of time in knowing how to not to make these uncontrolled losses. And that's the important area we are going to put 95% of the efforts in this entire workshop. And all our trading journey, or all the trading books, all the trading information channels will or will talk about this uncontrolled losses, but many of these books or channels will not have a proper method to prepare for this uncontrolled losses. And I'm going to give you the exact actions how can one fresher participants or experienced participant can stay away from uncontrolled loss in entire trading journey. And we are going to discuss exact actions which one can take, and without any additional efforts, definitely. And if anyone is taking these actions in his or her entire lifetime, he is not going to make any uncontrolled losses. And I would also like to know your opinion at day 5, whether whatever I have claimed is valid or not for this workshop. Okay, so the most important part is psychology. So now, as we know, the sentiments we are considering are belonging to big players. It is like the participants who are responsible for the direction of the market or direction of the index. So we need to then align our psychology to understand their sentiments, to process their sentiments, and to develop something which can handle their sentiments, and along with that we can copy their sentiments or we can copy their trading style. Okay, so now we need to work upon our psychology, and this psychology should suit to execute the method which FIs are executing in the market. So we are all not same as our experiences and actions and result. So every mind is different, and the execution skill of that mind is different. If for me, suppose minus 2000 is big loss, for some participants minus 20,000 is too small. Okay, so here the area which we are landing into, or there are two different poles like south pole and north pole in the market, and we are going to land, or we are going to identify our spot between these two poles. So there are some participants, they are best in adjustment, or they don't care about market structure. They do not worry about market structure. They just know how to enter into the market, and if the position is going in their way or position is positive, they know how to handle that. If position is negative, they know how to adjust that position to a level uh, where they are not making any losses. So they have done mastery in adjustment. So there are one kind of participant. What are the other kind of participants? They just cannot enter into the market because initially they want to know what is the structure in the market, and once they know the structure in the structure of a market, then and only then they can enter into the market. So for me, I belong to a psychology where I need to know the structure in advance, then and only then I can make some decisions. So you need to then identify your spot. So some participants are best in adjustment, along with that they have they have some skills, so they can identify some of the market structures, and they can belong to this center of the spectrum. So many of the option sellers, they have huge amount of money, they belong to this, or they are closer to this spot. They are expert in adjustment, and as an option seller they have a huge amount of money, and that money supports this thought process, and that's the reason they just enter into the market. It is like 920 straddle, or they are entering into the market, and they are practicing to adjust that straddle for entire day, or they are carry forwarding that for next day, and that is how they have made their expertise. But they don't care about the structure. If we are option buyers, if you are, suppose, investors, if you are monthly investors, if you are investors who is holding their position beyond months, beyond years, so the every psychology is present in this entire spectrum, and we need to identify the right spot of our psychology. And for us, we know, or we have some methods, by using those methods we can know market sentiments in advance, and we can align our psychology in the area where these market structures are handled. And then we fall into the we fall towards the right part of the spectrum. And if you have the similar psychology, you can use exactly everything which I am going to share with you. If you are option seller, definitely you don't need these skills, but by knowing these skills, it is going to improve your result to completely different level. Why completely different level? Because there is one of the myth, 920 straddle. That is the myth. It is not about 920 straddle. Sometimes, like around 82% of the times, market goes sideways after 920, and then only at in that phase this 920 straddle works. But most of the participants considers 920 straddle works every day in the market, and they just start entering into the market at the beginning of 915 or 920, around from 915 to 920, and they start adjusting their position. But there are some scenarios in the market, sometimes market do not start sideways, sometimes market starts from 915, it start trending, and it trends for another 500, 600, 700, or 1000 points. Okay, so what kind of journey you would like to proceed with, like in stock market? So there are some participants, we are in same train. So you can see there are some party, if you ask your co-passenger where the stock is heading towards, this passenger will have some limited skills, and he can analyze that stock by using his skill, and he exactly don't know where the stock is going from 100 rupees to, either it can be for 200 rupees, or for it is going to go down like to 50 rupees. Instead of going for another 100 rupees, it may reduce to 50 rupees. Okay, so that's the limited information. Who can give us an right information? It is like, if I'm taking the example of this train, if you are looking into all the passengers, there is one passenger who is just relaxed, and he is not aware of whether is where the train is going. Why? The answer is, all these passengers, they have just entered in one of the station by looking into the indicators, and they are only aware that the train is going to halt, take a halt at their stop, and they are not aware the final destination of the train. But this guy has asked the motorman, and that motorman has said this train is going exactly to this junction, and he knows the junction is the last stop for his journey as well, or until his journey, the until his stop, or all his stops are covered, and then the train is going to stop at the junction. Okay, so in our case, this is the right information we are going to get from FIs, and these FIs are going to give us an clue where exactly the market is heading towards. And once we are getting this clue, we just need to copy their actions. Okay, and in this entire structure of a psychology, as I mentioned, there is an break even point. This break even identification of this break even point is very important. So today we are not going to discuss more about actual trading style. We are discussing more about our feeling about trading, or our whatever chemical reaction happening with our brain when we are trading or when we are investing. And most of the participants are responsible for their own chemical reaction, but we are not putting good amount of time in understanding why this chemical reaction is happening, why our mind goes into that stage where it cannot handle a situation which is not planned. And normally we enter into the market with proper plan, but there is some trigger which is happening with the mind, and after that trigger, mind is not ready to accept the failure, or mind is not ready to accept the current state of that position or current state of that trade, and it tries to do something which is not planned. And to identify that, there is an important point, we call it as a break even point. So every mind has a break even point, and after this break even point, our mind goes into the mode which is beyond our control. Okay, so there are different phases a trader running through entire in its entire trading journey. And normally whenever we are starting with the market, we start making uncontrolled losses. Then after spending good amount of time, and if you still have money, then after certain time this trader start controlling their loss, and then it is moving towards the actual success. We call it as a success in the market. So instead of making big losses every day, he start making big losses someday and small losses other days. After doing this, there will be some days where he start making some small profits. But if along with this small profit, if he's still making big losses, the participant is not going to move towards the successful journey. So one fine day he come across a big loss, and this big profit, and this big profit, if he might have noticed how he has made this big profit, then and only then he can repeat this process. If he has not noticed, or in this entire journey, if he has not noticed why he's making big losses, why he's making small losses, why he's making small profits or big profits, he is not going to go forward or go towards the successful journey. And we are going to discuss more deeper why we are still making uncontrolled losses. Would you like to know about this, why we are still making, how many of you are still making uncontrolled losses? Is there anyone who is still making uncontrolled losses, or your losses are always in control? Not now. Okay. Sarvanan is saying no. What about others? Only control losses. Good. What about others? Are you guys still making control losses or uncontrolled losses? Control profits? Okay, good. Proper SL. Good. Mini Bhaskar. Not now. Okay. So let's go ahead. Would you like to know why these uncontrolled losses are happening with our mind, and how to stop making these uncontrolled losses? Or you already have the solution to handle these uncontrolled losses? Sometimes happens, but trying to exit with proper SL. Good. So I see every one of, like, many of the participants in this workshop are already doing good in handling their losses. And if you would like to know this process, what exactly triggers the uncontrolled losses, or how the mind is behaving and how to control that, then we can go into this part. Otherwise we can skip and we can go directly to the charts, and we can then go towards the end of this session. Would you like to cover this part? Okay, thank you for the permission. So if we are talking about psychology, and now we are tuning our psychology to handle the process of big players, and to understand this, like how these big players are driving us. where we go out of control and we do what they want us to do. Normally they are planning everything and we are responding or reacting. Better way is reacting to their actions. And if we are start responding to their actions, then it is going to change our journey. So normally whenever we enter into any position, we, if that position goes into the loss, our mind has some different behavior. If that position goes into the profit, our mind has some different behavior. Now we are going to discuss about that. And let me check the time, so we still have half an hour. We are going good. So how the mind processes it, if we are understanding this, whenever we are making any losses, we just first recognize the number, because our mind has a capacity to process the numbers. Although it is in red, definitely red is a sign of danger, green is a sign of goodness, or we consider red as an fear and green as an greed. And the mind has different perception, different behavior in digesting the loss and digesting the profit. So this minus 400, initially it is registered as a minus 400 number. Once if you are waiting more and it becomes minus 1000, our mind register this as an we are going towards a big number, and that too in loss. And after some time, like on first minute you see minus 400, you saw on fifth minute you saw it is becoming minus 1000, on 15th minute you saw it minus 2000, and now this minus 2000 is a point where your mind converts it into the color, or it stops recognizing this as a number. It just registers this as a red color. Why red color? Because this minus 2000 has some chemical reaction in our mind. And after this, when you see on 20th minute it becomes minus 1200, you still to wait to a point where this your mind is expecting that this minus 1200 should become minus 1000 and then minus 400. So our mind goes in completely different behavior in handling this. And so gradually, if we are spending good amount of time in observing this, for our mind every number just becomes a color, and then this loss goes to in uncontrolled state. And there was one moment where you can stop this from becoming a color, and you can still recognize this as a number, and you can cut short that number. But the loss making or the fear is driving in such a way that you cannot stop your mind if you are not practice this. What is happening with the, if you are making any profit, so first time you see plus 400, there is an eureka moment, or there is a good thing happening with your position and you are happy. Then you see on next 5 minutes it is plus 1000, then you see plus 2000. And initially, instead of recognizing this as a number, after this 2000, after this 2000, if you are looking into the numbers, like for plus 400, it looks like you are in green, you just don't care about the number. Plus 1000, you just don't care about the number, you are green. The moment you are watching the highest profit, after that your mind goes into a mode where it starts processing this number, because it is beyond certain point. The profit which is you're looking into your account is crossing that imaginary point in your mind, and because of this, you first time you can digest or you can process this number as a big number or big profit, or it is beyond your expectation, and then you see plus 500. The moment you see plus 500 after plus 2000, your mind goes into the mode of greediness, or you need to grab this profit, or you cannot wait more to soy, or you cannot see or watch this more in the, and it is reducing. It is like the number, if it is keep on reducing, your mind says, or your mind says just book this profit. You don't want to lose this profit. Because of greedy nature, you just can't wait and you just book this profit. and then whatever profit you have seen as the biggest profit, you still keep booking the smallest number. Whatever I am discussing, is this happening with you, any one of you? Is this a similar chemical reaction happening with any one of your mind? Just say yes or no. Have you observed this point in live market? So it is because our mind has a different capacity to process this information. These tools are basically our enemies. If anyone is developing an application which has no color, if it is showing profit in gray color and loss in gray color, maybe our we will have a better trading journey or better investment journey, because these numbers with colors are the mind has some completely different information processing level. So how mind processes it, and if we are deploying any process in this instead of going towards the mind or going to the mind, as you are mentioning, for everyone it is happening, and definitely every mind has some processing power, and this processing power uh, is responsible for that chemical reaction, and in the response to that chemical reaction we react to the market, we react to the situation. And if we are deploying any process in this, then the reaction comes from the process, not from our brain. And so that we can deploy some process and we can avoid our mind to get involved in this process. So we are talking about one process where it this process can avoid our mind involvement, and we can then start following the process. Although for initial level our mind needs to practice this process, and after certain time, once you have done enough practice, then our mind executes this process seamlessly. It is like you have deployed this in your subconscious mind, and then subconscious mind reacts to this, and consciously you will not have any control on this execution. What is the execution? Whenever you are watching a loss, if it is minus 400, okay, minus 1000, okay, minus 2000, cut this loss. That's the process. So we are going to deploy the process which is going to cut this loss near around our break even point. And in terms of profit, if we are looking into the profit, it will first try to process the number, how much profit is there, plus 400, then plus 1000, plus 2000. When you are crossing this plus 2000, then we are controlling this profit to a lowest level, where even after, if your position get reversed, it is going to give you at least a brokerage or at least smallest portion of your profit. And how to install this process? Are you guys interested in understanding this? This is very simple process. We need to play this game with the mind, and this game is already played by default. There is a game played with the mind by adding a element of by adding these two elements, greed and fear. The default game is played in a default way, and we are going to change their default settings. And if you are going to change your default setting from today onward, you are going to see a completely change in your trading style from tomorrow onwards. Okay, would you like to see that game? It is very simple. You have already known one part of it. We are going to discuss the reverse part of it. So what happens to your mind whenever our mind says uncontrolled loss? So there are different phases. Every day, whenever we are starting our trading journey, it starts from the mid of this. Whenever you start, it starts from the mid of this. Somewhere from here, and then if you are spending good amount of time, if your analysis, everything is right, the price, you are going to get small profit. You start getting small profit. Then there is an situation happening, then you are going, your profit turns little much bigger. Then after spending additional time, it it is getting reduced, then again it is getting reduced, and we are reaching to the point where it is a small loss. And after some point, if you are spending good amount of time, again it is heading towards the big loss, it is again heading towards the big loss, and there is one phase it is turning into the biggest loss. Okay, now if you see the journey, after 5 minutes good small profit, little bit big profit, again small profit, no profit, no loss, small loss, little big loss, loss on higher side, and the highest loss. If you are looking into this journey, the default direction of any trade is towards uncontrolled loss. And every trader or every investor, before going into the market, definitely that trader or investor has some plan to control their profit and plan to control their losses, right? So if we are talking about plan, so we have plan to control our losses and plan to control our profit. What changes that plan is the sentiments, the emotion of fear and the emotion of greed. And why it is continuously triggering between this fear and greed, fear and greed, fear and greed, why it is continuously toggling? Because it is a live position, and market beats every second it is going to update a new number, and that new number, if it is landing in any of the area, it is going to fall into one of the sentiments, either it can be fear or greed. And if it is going to fear, the default action is taken by fear is different, and default action taken by greed is different. So normally when we are talking about default, the default state of mind, when we add hope to fear, it goes into the wait mode, and when we add hope to greed, it goes into the get mode. So our default psychology is aligned in such a way that if you are in fear, you should wait, if you are in greed, you should get. So that means the result of this action is, if you are watching any small profit, you start getting that small profit as soon as possible. But if you are start making a losses, if we are adding hope to this fearful sentiment, it keeps on waiting, it keeps on waiting. How many of you have observed this with your mind? Whatever I'm talking is logical or illogical? Have you observed this in your trading? So if we are adding hope to the fear, it is going to give us a result. Wait. Every time it will not give us a result. Get whatever loss, just get it. It will never show, it will never ask us to get it. So what we need to fix first, the most important thing in after today's session, we are going to fix one line. It can be anywhere between this small loss and big loss. It can be anywhere. It can be after 2000, it can be after 5000, it can be after 10,000. Okay, and how to use this line? By changing the hope element. How to use this? Simply we need to reverse this. What and how we are going to reverse this? If any moment, if you are starting your position, just imagine this, and your position is heading toward this point, it has created a small profit, it has taken a U-turn, reversal, and no profit, no loss, it is coming back, small loss, and it is coming towards your break even point. This is break even point, we call it as an break even point. What is the role of break even point? This is a barrier, or this is the boundary after which your trade will have no life. It is like, get it. Once your position is touching this point, just get it. And suppose your position, instead of going back, so instead of reaching to this point, after this point it has taken again U-turn. Just imagine this, and it is start making small profit, no profit, no loss, small profit, then again a profit. So once you have crossed this small profit, we can switch this line to this point. Then suppose you are heading towards right side again, we can switch this line to this point. And slowly, if we are heading towards profit, bigger profit, we can switch this line with the same distance which you have planned before. And because of this, if it is taking U-turn now, then at least you are going to get good profit. And if it is in your destiny to book uncontrolled profits, so what is the other way you can handle it? If one fine day you got an opportunity where you see your position is profitable for half of the day, and you know that market is going to travel a direction which we have you have decided, you can just keep your stop loss in wait mode towards the small profit or near to the brokerage point. And I'm practically going to show you some of the trades where we have kept our stop loss at plus 3 points in bank nifty, and it has given us more than 300-400 points by spending entire day on a positive side, and they have not eaten our stop loss. So there are some scenarios like this, and whenever it is going against me, we are going to lose minus 51 points in bank nifty. What is minus 51 points? It is a capacity of my mind to digest. Minus 51 points I can digest, and then I can come back to zero within 1, 2 or 3 days. That is the my current mind capacity. Initially it was minus 17, then I improved it to minus 20, minus 30, minus 33, minus 35. Now after 5 years, I have reached to a point where every day I can earn 51 points from Bank Nifty irrespective of market's condition, and I am ready to lose minus 51 points. Okay, how many of you understood this concept? Gate and wait. So whenever fear is added with the hope, we are going to book that loss. And every time we will book on same point. So what we are going to practice in next 7 months is booking our loss at minus 51 points in bank nifty. Whatever is going to happen with your position, you are not going to book more than this loss. Once you are booking this loss, then what could be the next action that we are going to discuss on day 4 and day 5. Okay, get weight is clear. So on the scale of 1 to 10, just share your understanding. What is your level of understanding about get and weight? So we are changing our psychology and we are reversing this. Okay, Renuk Sai is saying 7. Any difficulty in understanding this? Or we can go ahead for the next topic. What is your opinion? No difficulty. Okay, no problem. Now, as we have understood how to configure this gate and wait, we should identify the right spot from where we can configure this gate and wait, right? So we will proceed to the next topic, which is, as gate and wait is configuration done, let me introduce to you a shield. A shield is something which is going to protect us from the blunders of the market. And what is a shield? It is, for an example, I have taken rupees 5,000. It is an identification of your break even point. So suppose 5,000. So I would like to ask, as there are 10 participants, what is the number you see in loss and like minus 1,000, minus 2, what is your number? And after watching that number in your position, your mind behaves in completely uncontrolled way, or mind behaves in completely weird manner. What is your number? Minus 1,000 for Sarvanan. What are the numbers for others? Minus 1,000 for Mini, minus 5,000 for Robin. Just share your numbers. I just want more and more numbers, and why these numbers are different, and we are going to discuss how we are going to define a shield around this number. Minus 1,500 to 2,000, minus 1,000, right? So every mind has different number, but our method, whatever method I'm going to share with you, it is going to define, or it is going to give you a skill by using which you can map your break even to the market's risk. And this is going to happen tomorrow. So today we are going to discuss about shields, and how this shield is responsible for our the opportunity window concept, and how it is going to help us in opportunity window, that we are going to discuss tomorrow. Okay, so we are considering minus 5,000 or 5,000 rupees is the number, is my break even. So you have rightly identified, suppose your break even. What is what is importance of break even? Once you know this break even, whatever happens within this range till minus 5,000, mind is stable, all actions are stable, results are stable, or everything is expected until this minus 5,000, and we can plan everything till this 5,000. What happens when the mind is crossing this boundary, or your loss is crossing this boundary? It goes into unstable mode, state of mind. All the actions you have defined only to handle minus 5,000, but not beyond that. So all action results are goes into an unexpected mode, or it goes into an unplanned mode, and that's the area where mind is again gets involved, because this number is triggering that event which is causing to perform some unplanned activities. So if we are aware of this shield, the behavior of shield, behavior of this number, like behavior of this loss, whenever the loss is within this range, like we are inside this boundary, the mind is stable. Whenever we are outside, it is unstable. So we can rightly identify our spot in mind, our break even in mind. And now once we have identified this break even, we are going to define a shield around this. And to define the shield around this, what is the role of shield? The role of shield is, suppose okay, the role of shield is, whenever you are entering into the market, you should enter with this shield. And whenever you are experiencing anything which is not, which is beyond this shield, we should just get out of that position. And how to do that, or how the shield is going to protect us, that that we are going to discuss. Okay, so this is uncontrolled loss, this is uncontrolled profit, and it is never about how much money we lose, but how we have lost that money. It is more important. So for an example, to explain this shield in more detailed way, let me give you an example. If you are losing 5,000, okay, in one of the situation, it is like, there is one situation. Suppose a stock has a price 1,000 rupees, its current market price is 1,000 rupees. Okay, and if you are expecting the daily movement or the average movement of stock is in 100 rupees, so a 1,000 rupees stock can move in 100 rupees, like 10% daily. Okay, in this case, suppose you have deployed 5 quantity in this stock. So to see this number 5,000, How much money you need to lose from this stock? So the stock cost is 1,000 rupees. The stock itself is 1,000 rupees, and you are deploying only 5 quantity. Are you going to lose 5,000 rupees in this stock? Right? We are not going to lose this 5,000 rupees. So suppose you are deployed 5 quantities and it becomes zero, then and only then you are going to lose. Like after deploying 5 quantities, if you want to see this minus 5,000, the stock should become zero, right? In this case, losing this 5,000, what is the probability of losing this 5,000? In how many days you can lose this 5,000? If the daily fluctuation is suppose 100, are you going to lose this in one single day? No. So in this scenario, at least we get some good amount of time where we can lose this 5,000, but enough time to respond to this situation. But there are some cases like, if the same 1,000 rupees stock, and suppose you have deployed 500 quantity, in how many points, like the range of the stock is 100 rupees, and suppose you are losing 10 rupees in this stock, are you going to get any reaction time or response time in this situation? So instead of 5 quantity, you have deployed 500 quantity, and stock has went against you by only 10 points. If I ask you, what was in both the situation, what was controlled loss and what was uncontrolled loss? The first case was controlled or uncontrolled, or second case was controlled or uncontrolled? Are you understanding the difference between both the position? In first position we have deployed only 5 quantity, in second position we have deployed 500 quantity, and we know the price of the stock and the capacity of the movement, like within one day it can move 100 points. Okay, so as per my understanding, second case is uncontrolled profit. So what this statement is saying, it is never about how much money you lose, it is always about how are you losing this minus 5,000 rupees. By doing some weird mathematics, like just by knowing this number 1,000 adding quantity of 500, we should have some logic in defining this quantity, and this quantity should protect our shield. This part we are going to understand tomorrow. So what we are going to do tomorrow is, whenever we are entering into this boat, we are not directly jumping into the boat. We will first put our first leg in the boat. We will test whether this boat is going to sink or not. If it is not sinking, then we are going to deploy some deploy, or we are going to put our additional leg, and then we will put our entire body into the boat, and we will then start toggling between this entire area. And how to know this? So what we are going to do with this is, we are going to understand the depth of the market, and along with that we are going to understand the limit of our brain, and we are going to map these two things. One part is how far market can go against us, that's the one first important part. And the second part is, if market is going
against us with the 100% of its capacity. Like market has consumed all its capacity to go against us. In this 100%, if we are mapping our break even point, so that after consuming 100%, if our loss is still minus 5,000, then we are still inside the shield, and our mind is not going to react to the situation. We are still in the response mode. Our mind is going to respond to this situation, because our mind start behaving weird way whenever it sees loss as an minus 5001, 5002, or 5200 something. The number if crossing beyond 5000, then and only then our mind is going to react to the situation. Otherwise it is stable. So we are going to map this 100% risk to this 5000 rupees, and we are going to look this tomorrow. And we have defined a very logical, highly effective, so powerful method, the opportunity window method. And using that method, I can guarantee you, from tomorrow onwards, if you are going to deploy any of your money in any of the stock at any of the price, your risk will be same. I am talking about any of the price, whether that stock is at 100 rupees, whether it is at 1000 rupees. The same stock, if you saw that stock at 1000, you thought of buying something, you can buy. If you saw that stock tomorrow at 2000, still you can buy with the same risk. That's possible. Okay, so we are going to cover that topic tomorrow, and then we are going to discuss about how this shield is toggling between this all the four phases, and what is the best part of this opportunity window. Okay, so as per psychology, we should define our shield, and this shield is going to help us in the topic of opportunity window. So as per today's topic, we have covered our all the planned points, or all the planned topics as per today's session. And if you have any queries, you can definitely ask. Before visiting to the queries, I just want to know your understanding about today's topic on the scale of 1 to 9. Have you rightly understood what sentiments we are looking into, and what kind of psychology we are using to develop opportunity window and patience zone? On the scale of 1 to 10, just share your understanding. Robin is 10, good. Sarvanan is 9.5. Mini is 9. What about others? Deepak ji, what about you? Hemraj ji, what about you? Hemraj is 10, good. Karthik, I guess you have joined late, or you were there since the beginning of the session. Okay, 5 minutes back, not a problem. You're going to get the recording of this, and please try to visit the recording before tomorrow's session. Okay, yeah. So if you okay, so there are now two conditions or two situations. It is like, would you like to see what is going to happen in next sessions? What is exactly two lines theory, and what we are going to discuss about two lines? Or would you first need to resolve if you have any queries? So what topic we should take first? As we have reached to the limit of this workshop, 9:30 is already done. We are ahead of our time, 5 minutes. We have taken 5 minutes more. So would you like to just take a brief overview of two lines theory now, or would you like to go for queries first? What topic you need first? Do you have any queries? Otherwise, I am going to show you the quickest overview of two line theory. What could be the possibility of two line theory and how powerful this theory is by just showing one candle, and how this one candle has revealed this to us. And we were aware of this theory since last 5 years, but unfortunately or fortunately during corona fall, the big players could not hide their price action, because the price action has this advantage and disadvantage. Because it is an price action, it is common for all. It is definitely going to show what is happened with the price and who has done what with the price, and so I'm going to explain that. So would you like to spend next 2-3 minutes or 5 minutes to understand, to just get an overview of this two lines theory, what we are going to learn in further session, and then we can close this session. Okay, how many of you have already aware of this two lines theory, or your first time you're watching attending this session? Himraj is first time. Mini is aware. Okay. Sarvanan is second time attending. No problem. Second time. Okay. Karthik is first time. So you guys are, some of the participants are already aware, right? So let me switch to the chart. So these two lines is nothing but a two control points. The big players are deploying their control points, and these control points are responsible for the direction of the market. And basically the control, entire control is in their hand. And normally this, the big players which I am referring to, they are from Singapore, or they are from the countries, or they are bringing their money from other countries, and by deploying their money they are stealing money from our retail traders which are present in Indian stock market. And how they are doing it, how we can analyze it, let me show you how we have defined this theory quickly, and then we are also going in to take a deep dive in upcoming sessions. So there are some control points. It is like, I'll start with this candle and then I'll go back and I'll come forward again. So this was corona fall, and if you would like to rightly identify how many of, like, as you some of the participants are already aware, at this point, if anyone says the market is going to take a halt at exactly at this point, is this possible with the chart? Those who are not aware of the two lines theory, is there any method by using which we can identify the price is going to price is going to take halt at exactly this point, right? It is not possible. But with two control lines, with the identification of two control lines, not about only this spot, every high and low which is marked on this bank nifty has some planning, some algorithms are doing it, and I am going to show you how they are doing it. So in this entire corona fall, there was one big candle, and this big candle is green, and that candle has revealed this to us as an retail participant. And if we check this candle, 13th March 2020 candle, already the skills were with us before these candles also, but this candle has proven that fact. Whatever theorem we were following since last many days, it has given a proof on chart and exact footprints of what big players are doing with their money and in Indian stock market. Okay, so this candle length, if we are checking the length of this candle, it is around 4,320. If we calculate highs and lows, it will come to 4,320. And this is, just imagine this as in two bags of money. This is not single bag, this is two bags of money. So what is the value of one bag of money? One bag of money is 2160. So this is one bag of money. I am keeping this aside. Okay. And now I'm going to plot this with the future perspective, and then we will again go back and we will again see the calculation which is responsible for bank nifty. Okay. Now this 2160 from this low, just imagine this, from this low, if price is anytime crossing above 2160, we will mark it as an important control point. So this becomes a control point. And then if from any high the price is crossing below 2160, I'll just mark it as an 2160. Okay. So this is important control point. Why we calling it as an control point? So from this point, someone has pushed the price upside beyond 2160, and from this point someone has pushed the price downside beyond or below 2160. Have you understood this point, new participants, Karthik and Sarvanan? Yes, have you understood these 2 points? Just say yes or no. Okay, what I'm saying over here is, from any low, so there is an low which has happened in the market. From that low someone started buying, and he has bought to a level where he pushed the price from this low beyond 2160. It is like up till this point it is okay. When the price is crossed beyond 2160, that means someone has added control or someone is controlling this point. Even at this point someone has pushed price down and price went below 2160. If this is happening in the market, so this, someone is putting this amount of money just to manipulate the price. And if we know this manipulation, then we, by looking at current price action, we can definitely know what is going to happen in future. So have you understood this point? From this high someone has created sell position, and because of that sell position, market has traveled down by 2160 points and it has reached to this point. Are you guys getting this point? Yes. Now I will mark these two control points. And as I said, if you are marking this control point, one moment, why it is not going? Okay. As we are marking this control point, this control point is going to decide what is going to happen with this index, bank nifty, in coming future. So as I said, there are three different directions. You might remember this slide. Three trends: downtrend, uptrend, and the sideways. So I have attended this board meeting. This sideways move was this. I have attended this board meeting, and this board meeting said the next stop market is going to take at whenever price goes. So what two line theory says, the price is being controlled within these two control points for certain duration, and once the price is coming out, it is going to travel twice the distance of this control. Suppose the distance between these 2 points is something, the price if coming out from any of the side, it is going to travel twice the distance. So when it has crossed upper boundary, it is going to travel to this point. That's the right understanding of this two lines theory. But then during this entire journey, what has happened, the price has manipulated, or there was some point where additional money is been put in the price to bring it down, to create a false down move. So this was the phase where they have deployed some additional money and they have created a false down move, and because of this there will be additional returns they are expecting. And what are these additional returns? Third X. So if you see, by knowing these two lines, we can exactly know how and when the price is going to decline. And from these control points, we know exactly at 3x the market has started falling. And in between this entire journey, if you follow this, like from any low, price is crossing about 2160, price will not have capacity to cross below 2160. Can you see this? From any high, price is not allowed to cross below 2160. Only because of this additional control they have allowed price to cross below, and this was a false move. But when they have resumed their actual move, like from again from low, price is bought about 2160, again from any high, there is no one who has money to bring price down below 2160 except this point. This was the again there was some event happened. Because of news, price tried to break this, but within next one day it has again resumed. So if we are coming out of this trend, we can assume again resume at this point. And after this point, when price has crossed below this level, they have defined new control point. What is the definition of new control point? So from this point, when price has crossed below 2160, we need to check for another control point, where from this low price has crossed about 2160. And now we will redefine this new controls. We will try to calculate new decision making phase, and as it is a decision making phase, rightly identify price is going to spend good amount of time in this phase. And we can see the price has taken a break upside. So after taking break, price should go to upside 2x, but this was not happened, and this was false up break. And because of this false up break, although price has not entered to the 1x area or 2x area, how to identify this was false? So after crossing this boundary, whenever price is crossing below this range without touching to 2x, it is an false move, false up move. And how long that false up move can go? If we look into the downside, it can go up to this point, and that's why it has exactly went up to this point. And then there was another lower high made, and you can see from this point it has exactly reached to this point, and now we are stuck into this range. So from any high we can clearly know how long the price can go. And I'll also try to share my observations which are already available on Twitter. During live market, when I said the price is going to stop, exactly take a halt at 32,216, and from that we are expecting 4,000 points up move. How can we say that this is not because of any other tool, because of only this theory? We can say that. And whether it has happened in past or not, so as I said, would you like to see the bottom of the market by knowing this theory in advance? So before corona fall, this range was 1600. Audio is low. Am I audible now? So before Corona fall, this range was 1600. So from this point, the market went beyond. This is 1600 and this is 1600 downside. Okay, I'll just mark. What are these ranges? How we have defined these ranges? How we have identified these ranges? We can we are going to discuss this in our upcoming session. Only today I would like to show you what we are going to discuss in upcoming session. Okay, so this is the controlled define before Corona. It was the control. Okay, price started traveling with same control, and then there was a final move. And as price was coming out, it is been controlled within this range. Again, you can see this range. This is common range. Every time price is being controlled, this is common range. Even at this point also, if you can extend this the sideways, as I mentioned, board meeting is happening. This was one of the important board meeting was happening that time. Here there was before Sitaraman, the one of the board meeting has happened, and the range was 1600 points. Okay, this was again the board meeting which has happened in past, and with this control point, the price is being controlled and the same range. And when the price has broken this is 1x, this is 2x, and this is 3x. Can you see exactly? Is this something which is not known to any of the participant, or is this an eureka moment for us? Or I'm saying, if we get to know this skill, what could be the control of retailers on price action? Okay, first thing, do you believe these levels? I have not defined these levels. We have come across to these levels by performing or by doing some observations, and exactly this range was present in the market since 2017, and market is going to crash in 2020. When the market is going to crash, any movement from any high, the market should not market should not break this low. From any high, market should not break this low. From any high, market should not break this low. Before Sitaraman candle, market tried to break this low, but someone has protected this level. And then there was the final high made by the market, and then market broke this low. Once we know the market has crossed this range, then by knowing this tool, one can definitely know how long that market can fall. Is this something crazy, or have you seen such kind of levels or such kind of understanding in any of the sessions or books or any of the YouTube channels? And how it is going to change your trading journey, trading style, that I'm going to explain in upcoming 4 days. Okay, so is this an wow movement or confusing movement? Yes, there are some participants who knows this theory say before 2020, and during this spot they have bought some stocks and they have carried the position for 800% moves, 500%. They have collected the returns more than 800, 500%. Okay, can you apply this and show for current scenario once? We have already applied this. So this is the logic. 2160 is the range. Someone has deployed the control points. Market went sideways. Again, someone has deployed the control points. Are you asking the same thing, Karthik? Karthik ji, are you asking the same thing? This month, about this month, but if you are talking about this month, once this range is defined, we are expecting breakouts of this range, and in we are inside this range again. So if we are ignoring this false breakout, where are we exactly? Where are we are sitting in this range only. So we should expect a market should move either 2x upside or 2x downside, and then we can consider this as an correction. So these two lines are present on daily. The similar two lines are present on every time frame. It is like on 5 minutes. If you can see on 5 minutes, it is present on 5 minutes. It is present on 15 minutes. Every time frame has some different range. We are going to discuss levels in detail. Yes, yes. We are going to discuss each and every part and each and every time frame in detail. So these are the levels which are present on 5 minutes time frame. Okay, these are some of the levels. And whatever happening with daily time frame, the similar behavior we have observed, and we can definitely plot this behavior on 5 minutes time frame like this. So on the initial look, it should look complicated to new participant, but okay, like this market goes sideways in 5 minutes, and if it is breaking, it goes for 2x or 3x or 1x as per the market structure. So it goes for 3x, and then it again goes sideways. So every time the board meeting is happening, market can give us 2x like this, like this. After this sideways phase, 2x move, this sideways phase upside 2x move, this sideways, okay, this sideways downside 2x move, this sideways upside 1x downside 2x move, and this range, if you can see this range, this is same for entire run. We can consider the same range: sideways downside 2x, sideways upside 2x, sideways upside 2x, sideways downside 2x, sideways upside 2x. Why it is happening and how exactly it is happening? Like sideways 3x, we are going to see this. Are you guys interested in learning this, or do you find something different than whatever present in the market as a skill? So just spend your next 5 days and just don't compare this rupees 199 for this session. You're going to get more than this rupees 199. More important part is this next 1.5 hour which we are going to spend every day. It is going to take you to completely different world of trading, and this theory is not known to anyone yet, and I'm going to share this to only first 1,000 participants. and whatever we are understanding in this 5 day session is a 5% of this theory, still it is way powerful than, and still using this 5% of the theory you can start earning money from the market. So I'm done with my today's topic, and hopefully if you know this topic, if you are aware of this theory, or if you like to spend good time on this theory, just try to complete the exercises, or I'm going to put some activities into the group. Just try to go through these activities so that we will get to know the power of this theory. Using your existing method, we are going to perform some activities, and then I will help you to apply two line skill, and then you are going to see a major difference in our trading and execution style. So I'm done from my side. Is there any query from your side? Just proceed with the query, otherwise we can close this session. I am unable to understand 1x 2x 3x terminology. We'll understand this when we will discuss in. Yes, on day 3, you will get to know everything about 1x, 2x, 3x, even about the ranges, what have you plotted, or how to know this is the decision making phase, this is the action taking phase, this is the decision making phase, this is the action taking phase. We are going to know each and every part of this. And only thing is, like from you participant, I'm expecting commitment. And if you are willing to learn or willing to understand this concept, I am going to share everything about this concept. I will not do any conjuice in sharing this, because it is not going to affect my trading journey. Definitely I am getting good returns from this, and by sharing this, you are not going to take that returns from me, you are going to take returns from market. Okay, are there any other queries? Otherwise we can close this session. Sure, Hemraj. No problem. And you can raise any of your queries. Do not hesitate to raise your queries. And I'm willing to address all the queries as and when I get some time. Definitely, there will be some activities happening in the group. And if you are active in the group, I'll actively address your queries. Thank you, Pirates. So let's meet on tomorrow's session, which is most important session if you are interested in stocks. And after tomorrow, there will not be any situation where you are losing any money in the stocks. That's 100% guarantee from my side. Recording will be shared after 2.5 hours, as I am uploading this on YouTube. YouTube processes this HD version. It takes around 2 to 3 hours, and then around 12:30 or 1, you are going to get this recording on our YouTube channel. I am going to share the link in the group. Thank you, Pirates. I hope there are no other queries, so I am closing this session. And let's meet tomorrow. Bye.